The world of Bitcoin has been interesting in the last couple of months or so, with pushes to the upside, some small minor corrections, and it has left a lot of people wondering what is going on with the on-chain analytics. In today's video, we're going to be jumping into the on-chain data, and I'll be sharing my thoughts and opinions as to what this means for Bitcoin. Let's roll the intro and get right down into it. Hi guys, welcome back to the channel. Welcome back to another Bitcoin update. And today we are going to be talking about the on-chain data. So anyone who is not already familiar, we have a membership website, membership.𝗕𝗘𝗪𝗏𝗏𝗧𝗏. Here you can become a member. There's lots of different perks depending on the kind of things that you are looking for. And there's also different currencies that we support here. Okay, so we're just going to keep this on the dollar for now. On-chain and analytics comes under the Trader Plus section. Okay, so in here you can see that we have access to coin data and analysis. Okay, and this is accessed from the data zone and the data portal. When you click into there as a Trader Plus member, you get presented with this portal screen just here. Now, there are multiple projects that we currently have listed here, everything from Bitcoin, Cardano, Chainlink, Dogecoin, Ethereum, Litecoin, XRP, and that is continuously growing as well. We are looking to actually expand this data portal into another version that is going to be more comprehensive than it currently is, but I'm going to go through what we currently have available here on the data analysis for Bitcoin. So we have this overview to start with, right? This basically shows you price action across the years. In the graph, it shows you the all-time high, the date of the all-time high, the amount of percentage points we are down from the all-time high, the number of days since the all-time high, the circulating supply, the max supply, all those kind of wonderful things. A couple of things I like about this overview that's really important to note. The 19.6 million BTC that is in circulating supply, a very important number, out of the maximum 21 million, right? So we know that we only really have 1.38 million left to be mined, right? There's not a lot of Bitcoin left to be mined. Ultimately, the majority of Bitcoin is out in circulation. It's an important thing to remember, specifically as we have the halving events. As we move down these options on the left here, we'll go to network analysis. There's a few things here that I've spoken about before that's also kind of worth noting. One, obviously, the total number of addresses. The total number of addresses are 52 million. In the last 24 hours, 820,000 addresses were active, 670,000 received Bitcoin, and 537,000 sent Bitcoin. That means that some of these wallets basically sent and received BTC in the same 24-hour period. The main takeaway here is the 52 million total wallets, because that's actually quite disingenuous. It makes it look like there's a lot of wallets on Bitcoin, but in the reality, there's actually very little that actually hold Bitcoin. We'll talk about that in a moment. The number of transactions in the last 24 hours were 515. It's pretty decent. We have obviously seen this a lot more though, so we can note that there's a lot really been terribly too much activity in the last 24 hours. The fees paid were $7.7 million for the 515,000 transactions. That is incredibly expensive for what it is at the moment. Okay, again, that's kind of the way that the Bitcoin's going, so we'll keep a close eye on it. That actually represents 179 Bitcoin, okay, that was basically used for transaction purposes. 151 blocks were added to the chain, and the block height was, when I took the snapshot, 804. Okay, so 828,804 was the height. The inflation rate daily is 0.0048. That's basically how much Bitcoin is getting mined daily. And we can see that the yearly inflation rate is 1.76%. That's going to be halved, obviously, with the Bitcoin halving event. So obviously we know that when the Bitcoin halving event, you earn half the rewards that you used to. That basically means your inflation rate is going to get halved. So the new issuance daily at the moment is 943 Bitcoin, approximately $40 million basically being created from mining activities. So the important takeaways on the kind of network analysis here: 52 million wallets, inflation rate of 1.76, and it's 1.76% if I can talk, and obviously it's 943 Bitcoin basically issued in the last 24 hours, right? So it's interesting. In the last 24 hours, that's the new issuance. So As we come on over into the wallet analysis, there's a few things here that we need to note. Okay, there are 10 different sizes of wallet in this analysis. And so if we start at this top one just here, this is basically a wallet or a count of wallets that have more than 0.001 of Bitcoin. Okay, so we're talking really small amounts of Bitcoin, and you'll note that there's only 24,690 wallets. This is an indication that there's less than 50% of the wallets, the total wallets, actually have 1,000th of a Bitcoin. So we know that there's actually an insignificant amount of Bitcoin in 24.6 million wallets. This is less than half of the actual total. That means that we've seen over the years a lot of Bitcoin wallets open, but actually over half of them have died out. Okay, so you can argue whether or not we have Bitcoin adoption here or not. I think for the most part we can see that there's some interesting things going on with Bitcoin. We know it's kind of more now heading towards centralization in terms of big money having more centralized power. I mean, BlackRock, and we can talk about, Bitcoin spot ETFs and things like that. But we can also talk about mining operations and how BlackRock also has huge exposure to the mining operations, as well as obviously things like Bitcoin spot ETFs. This obviously does kind of, mean that Bitcoin's potentially going to have a long-term failure of the idea of decentralization and, bringing power back to, or financial freedom and power back to the people is what it was created for. It's actually kind of gone the other way. It's become very centralized and headed more towards institutions and all that. And you can see that within the wallets, with over 50% of the total number of wallets that ever existed died out. And it gets worse as we go up these levels, right? So let's talk about 1/100th of a Bitcoin. So 1% of a Bitcoin, only 12.6 million wallets. So we already now have dropped down even further, right? We've got another 50% drop in the wallet counts from the low side of 0.001 Bitcoin up to 0.01 Bitcoin. We've dropped another 50%. And if we go up to 10% of a Bitcoin, we drop again over another 50% to 4.5 million wallets. So we already know that the number of wallets that actually hold a significant amount of Bitcoin, they keep dropping as we kind of go through these milestones, to a point where we can argue that actually a lot of the wallets that exist, 52 million wallets exist, the vast majority of them are kind of pointless wallets. They don't actually facilitate anything. And that is quite problematic for that idea of decentralization in the future. There's a concentration of Bitcoin, and it's happening at the higher levels, not the lower levels. But there are some interesting things that happen as we kind of scale up from here. Okay, so this is 10% of a Bitcoin. So at today's video recording, we're talking $4.3 thousand, so $4,300. Something to that, which is, a good level. Okay, I think for retail investors to be investing in Bitcoin, people who have the 9-to-5s, don't have huge amounts of disposable income, but they've kind of got some exposure to Bitcoin. Around 10% Bitcoin is a good place, I think, for retail investors in that kind of bracket. And so 4.5 million wallets is pretty significant, holding 10% of a Bitcoin. So again, we can see here a reasonable amount of BTC, not massive amounts of Bitcoin, but a reasonable amount of Bitcoin is held at this level, and it is pretty chunky. Whereas the lower levels, you're talking $430 or lower, realistically speaking, isn't going to be huge when it comes to hodling power and the amount of Bitcoin that sits in those wallets and so forth. Don't get me wrong, the number of BTC is still pretty chunky across these layers, and that does cause me areas of concern, but we'll talk more about that in a moment. As we come up to 1 Bitcoiners, these are basically wallets that have a minimum balance of 1 Bitcoin. These are very interesting because these are kind of the kind of OGs of crypto to a point. They've been around maybe for 5 or so years. They've had this huge inspiration to kind of get up to and acquire 1 Bitcoin. It's been on a lot of retail investors' minds that I want to own 1 Bitcoin. It's a big milestone for them. And And yeah, so basically we have seen these guys growing quite massively in 2022, upwards to that 1 million level. That means there's over 1 million Bitcoin held by these retail investors now, which is quite, pretty decent. It's pretty impactful. We can see, though, that it hasn't really been doing much growth recently. In fact, over the last 6 months or so, it's barely grown 1%. And over the last 30 days, it's actually down 0.41%. So we know that retail investors right now have actually started to stall out. The economic climate has become quite troublesome. Liquidity is drying up. And we saw a lot of liquidity coming in, lots of FOMO activity around the Bitcoin spot ETFs at kind of this level and lower. That it has kind of now stalled out. We didn't have that all-time high moonshot that a lot of people thought was going to happen the second that these spot ETFs went live. Now, as we go up into 10 Bitcoin or more, these are your high net worth individuals. I still kind of class these guys as retail investors, simply because they do act somewhat differently to your standard kind of smaller retail wallets, but they act very differently to the larger institutional level wallets. They still act emotionally, but they have got more invested in, right? We are talking 10 Bitcoin, so we're talking substantial amounts, not quite like $1 million or anything like that. Usually around, if we take 10 Bitcoin as a clear example, you're talking around $430,000 upwards to probably around the $500,000 level, right? So high net worth individuals, they've got some exposure at a decent level to Bitcoin. And what you can see from these wallets is that they are actually aggressively selling off and have been for the last year. So they've been locking in profits as price was pushing up in 2023. You can see that they're down 0.34% in the last year, down 1.19% in the last 6 months, down 0.9% in the last 90 days. And you can see here that actually across all of these metrics, minus the last 24 hours, they've been down. They're basically just coming out of their positions. They've been selling their Bitcoin to retail investors during the move to the upside, right? A lot of retail investors owning, 1,000th of a Bitcoin or 1% of a Bitcoin, 10% of a Bitcoin, they were accumulating in 2023, right? In order for those guys to accumulate, they had to be buying it from someone that was selling. And the story is that we see a Bitcoin that those retail investors were buying was coming from these larger sized wallets, 10 Bitcoin, 100 Bitcoin, 1,000 Bitcoin or more, right? And so we can see the story hasn't really reversed yet at this high net worth individual level. And I don't think it's going to. I don't think they're going to come in just yet. And if we go over to the 100 Bitcoin or more, these are more your day traders. They don't terribly get involved in Bitcoin too much. They are in and out. They are basically just trading the swings in the market. That's kind of my analogy on this one. Okay, it seems that these wallets have just actually been steadily decreasing for quite some time in the same way that we saw with the high net worth individuals. So down in the last year, 1.68%. In the last 6 months, it's 0.49%. The last 3 months, it's actually 1.18%. And you can see the common theme here that these guys have been, again, selling their Bitcoin to the retail investor during 2023. And yeah, they've basically just been kind of locking in some profits as prices moved up, right? And again, these are active traders. They kind of don't have massive swings, not like they used to in the very early days when it was easy to acquire 100 Bitcoin. When it became harder and harder to acquire 100 Bitcoin or more, these guys basically started just to become traders, but they are decreasing over time. We can see that up here, there were 18,000 wallets back in 2017. There's now 15,000 wallets, right? So we know that there's a significant change there. But the most significant changes really are happening at the next level. This is 1,000 Bitcoin or more, known as the Bitcoin whales, right? A Bitcoin whale is classified as someone who owns more than 1,000 Bitcoin. Now, there are 2,067 wallets that own, 1,000 Bitcoin. And we can now see that in the last year or so, these guys have been accumulating a little bit. It's nothing major, but they have accumulated more over the last kind of 3 or so months. I'd say actually maybe 6 months or so, a little bit more accumulation has happened. And this has been pretty much as we've seen little pockets of selling at the 100 Bitcoin levels, the 10 Bitcoin levels, and of course the 1 Bitcoin levels most recently. And so we can see here that we have got some interesting swings in the market. In the last week, we've seen a 2.33% move for the Bitcoin whales, right? They've accumulated a little bit more in the last week. In the last 2 weeks, it's actually up 3.51%. And this is coming in line with, of course, that dip that we saw. So let's go ahead and just zoom in here. You can see that they were buying as we started to have this move to the downside. They started to accumulate. And as soon as these guys are accumulating, you can see the price started to recover up a little bit. Okay, now we don't know if this is going to be sustainable or not. We don't know if they're going to continue doing this. If they are, they're going to need to buy the Bitcoin from somewhere, right? So they can't just materialize Bitcoin out of thin air, right? So we are going to have to see some wallets, liquidating their assets for these guys to accumulate. And because these guys are looking to accumulate, we are going to have to see vast amounts of Bitcoin readily available for them. Okay, now obviously one of the interesting things about this is they do this from time to time where they accumulate and then the next thing you know they're dropping back off. We saw this over here, for example, back in February of 2022. They timed this quite well. They saw a bit of a push to the upside and then they started liquidating once again. So this move is quite substantial that we've seen so far, but it's not a clear-cut indication just yet that they aren't going to do what they did before, quick accumulation and then actually just reverse on us. The other thing we have to bear in mind here is there's a lot of things that could spook the market. Okay, so we obviously have spoken quite a bit about the kind of macro events that are unfolding, Evergrande, we've got potential World War III. We've also got a Federal Reserve pivot, as in the reduction of interest rates. These all historically have a negative price action at some point. So we want to be mindful that although this is potentially the start of something very good, we do need to see sustained selling pressure from the smaller side, such as 1 Bitcoiners, 10 Bitcoiners, in order for the larger investors like 1,000 Bitcoin or more whales to accumulate, because they can't just buy Bitcoin out of thin air, right? They have to be buying it from somewhere. Now, they could, of course, be buying it from mining operations if the miners are selling, and of course, they could be buying it from larger investors if people like the US government are selling their Bitcoin, for example, over the counter. They could, of course, be buying it from that angle as well. So there's a few other avenues that they could be buying the BTC from. We could see it from Grayscale and things like that as well. That could be another reason that we've seen a significant surge in wallets that have over 1,000 Bitcoin. What's not yet happened, in my opinion, is capitulation of the retail investor. Retail investors do hold a significant amount of BTC, and we need to be very mindful over that amount. From a 10,000 BTC or more point of view, you can see actually it's not as positive. They're down 4.35% over the last year. The last 30 days, they are up 3.77%. The last 60 days, they're also up 3.77%. So you can see that there's a little bit of fluctuations from time to time. They accumulated and pushed the price up into the $48,000. And since then, they've kind of just been kind of coming out a little bit. These guys are the ones that I'm most concerned about. They do hold a pretty significant amount of BTC. And they can control large movements in the market. They could flood the market with excess supply and drag that price down, as we had seen these guys aggressively selling into the move to the upside in 2023, basically passing their Bitcoin on to the retail investors who believed that, you'll go into new all-time highs. I don't think these guys believe that, and I do think they are likely to be looking to accumulate at lower prices. So I'm very mindful over the behavior of this size wallet, as we had seen back in 2017. Just because it happened before doesn't mean it's happening again. We definitely do have a different pattern and a different structure, very similar actually to kind of how we led up into the 2021 peak, the first peak. These guys were selling into that. So it's possible that maybe we can have another surge to the upside, and these guys are just going to be selling into this. But at 110 wallets, it's not a huge amount that they've kind of currently got there. So it'll be interesting to see how they actually perform. By the end of October, these wallets did drop down. At the end of October 2021, just before the actual peak, these wallets dropped down to 80 wallets. Okay, so we know that there was a lot of selling pressure from these guys, but there was also a lot of demand pushing the market to the upside. We haven't got that demand at the moment. So I'm mindful over what these guys are doing, but it's definitely not going to be directly exactly what happened before, because last time we saw a very significant sharp drop in these number of wallets. At the same time, we actually saw the bear market low. I think what we've got going on this time is slightly different, but it is quite worrying that they haven't been back in the move to the upside. So my expectations here will be that they will probably continue to sell off as we have more demand coming on in. Otherwise, more accumulation from these guys as we saw in the bear market. Now, when you go into the supply analysis, and I'll probably leave this one, leave the video after this, I think, because we've kind of rambled on for about 20 minutes now. Here we can see the supply of the assets, right, and where it is held. This is actually quite important, right? So as we kind of think about the larger sized wallets, right, we think about, whether their wallet has over 100,000 Bitcoin or over 10,000 Bitcoin, we can see how much supply is actually held at those levels. So for example, the level of MicroStrategy, right, 100,000 Bitcoin or more, those particular wallets, there's only 4 of them, but they hold 694,000 Bitcoin, right? So it's a lot of the supply of BTC. It's a really significant amount. It's 0.6% of the all of the supply is held just in 4 wallets. Now, as we kind of take a look at the 1,000 Bitcoin or more, right, those Bitcoin whales, they hold 7.86% of the supply. 7.86 million Bitcoin, right? 6.78% of the supply of BTC. So we know that, Bitcoin whales hold a pretty significant amount of BTC, but not as much as the 10,000 Bitcoin, or actually, sorry, it's not 10,000 Bitcoin or more. 10,000 Bitcoin or more is 2.63%. And it's the 100 Bitcoin, the traders, the active traders own 10% of the BTC. Okay. And so what's really interesting is kind of as we kind of dive into this, we can see that there's a lot of supply of Bitcoin held at the lower levels, right? So for example, let me just kind of regain my thoughts here. Bitcoin whales owning 1,000 Bitcoin or more, right? They own 7.8 million Bitcoin. Out of the 19.6 million, 7.8 million is held with Bitcoin whales. That is 1,000 Bitcoin or more, 10,000 Bitcoin or more. All of those guys, MicroStrategies, they hold 7.8 million Bitcoin. Okay. Now, as we kind of come down these lower levels, we can see that 18.9 million, it's actually 11 million, I guess, if we were to subtract the larger whale wallets, right? If we subtract the larger whale wallets, 11 million Bitcoin is held at the retail layer. And what I mean by that is all of those retail wallets with 1 Bitcoin or less, they hold 11 million Bitcoin. So holding 11 million Bitcoin at that particular level, in my opinion, is quite worrisome, right? Ultimately, my concern here is that 11 million BTC is held at an emotional layer. What I mean by that is they overreact to price movements. So either going to be FOMOing in all at the wrong time, or they are selling because they fear that the market's going to collapse and, or whatever. There's also a lot of people who require funds. They expose themselves to Bitcoin and cryptocurrency assets, and they put themselves into financial difficulty as a result. And so 11 million Bitcoin at a level where, they potentially are most vulnerable is quite concerning. Now, I've said before and I'll say it again, imagine if just 30% of retail investors sell their Bitcoin. And I think that is something that is truly possible. What is the result of 30% of retail investors selling? Well, it's over 3 million Bitcoin becoming available for sale on the market. And that is a significant amount of selling pressure that could drop the price of Bitcoin. And I think it's that drop and that amount of Bitcoin that the whales are looking to accumulate. They haven't accumulated it yet, but I do think we are going to see this shift. We're going to see retail investors selling their Bitcoin, and it's only going to be about 30% of them, maybe 20%, right? Where we are going to see a significant amount of Bitcoin flowing from the retail layers to the institutional level layers, the billionaires. And it hasn't happened yet, but I do think it is likely to happen. What price Bitcoin will be when that happens, I do not know. It might be 30,000, it might be 20,000. Like, anyone can kind of try to best guess this, but ultimately for me right now, I'm hopeful that 30k holds out, and that's going to be a great place for Bitcoin to be able to kind of hold its ground, see this shift, see this accumulation at the larger levels, and then we can really get swinging into that next bullish market. I'm going to leave the video right there, but why don't you check out this video right here where I'm discussing the path to $120,000 Bitcoin.